I'm here with Ian Ho, Equity Data Analyst. Ian recently wrote an article called Why CREIT is a Standout Among REITs. It can be found on morningstar.ca and cpms.com. Of course, CREIT is Canadian Real Estate Investment Trust, the oldest REIT in Canada and one of the largest. And Ian here is bullish on them. Ian, why don't you tell me a little bit about the company?
Well, as you said, CREIT is Canada's oldest real estate investment trust and one of its largest. CREIT does own a well-diversified, high-quality portfolio of over 160 retail, office, and industrial properties across Canada, with one property in the U.S. And CREIT's target mix of real estate assets is 50% retail, 25% industrial, and 25% office.
And for all the DIY investors watching, why would they put their hard-earned money in CREIT?
Well, for the DIY investors watching, there are several reasons why they should consider adding CREIT to their portfolios. The first one being is CREIT is managed conservatively. As of the end of 2011, CREIT does report a favorable interest coverage ratio, a favorable debt to gross book value ratio, and a favorable leverage ratio. The second reason why they may consider adding to their portfolios is CREIT does have a CREIT did not slash its distributions during 2008 to 2009 and its subsequent credit crisis, and in fact has been increasing its distributions since 1994. And third reason is CREIT has outperformed the TSX Composite on both a total return and price appreciation basis. So looking further, CREIT has exceeded the performance of the TSX Composite for the past 5 to 10 years and is in fact trading at record highs. Looking on a total return basis, for the past 5 years ending 2011, CREIT has generated an average annual return of 5.8% versus 1.3% for the TSX Composite. And looking back even further, for the past 10 years, CREIT has generated an average annual return of 12.6% versus only 7% for the composite.
Wow, and how does it rank with some of the CPMS variables?
CREIT ranks quite well with the CPMS variables, primarily with the cash flow and dividend variables. With regards to the cash flow variables, there is minimal variation across the current year estimates for the brokers who are covering CREIT, and their standard deviation is only 0.02%. Looking at the company's distributions, it's currently growing at a healthy clip of 3.5% from 2012 over 2011. And
are there any question marks surrounding the company?
There is indeed one question mark, and that relates to Timothy McSorley, who is the current VP and CFO since 1997, and he will be stepping down after a transition period. So there will be large shoes for his successor to fill, because Mr. McSorley did contribute significantly to the growth and success of CREIT.
Thanks so much for your time, Ian.
Thank you for having me.
And just a reminder, Ian's article can be found on cpms.com and morningstar.ca.